Good morning, everyone. I'm Catherine Ross with TheStreet. I'm here at the NYSE with Jim Cramer. Jim, how are you?
Well, look, we're in a bear market, okay? That means that stocks, what does a bear market mean? It means that good news doesn't matter, and bad news is accentuated. It can last for weeks, it can last for months. There are things that could change the situation, make it more positive. We got a good positive from Jay Powell, obviously not enough. The view is it's late cycle. Every good quarter is viewed as the last good quarter, which is why Walmart can roll over on a really fabulous quarter. It's why Katie Huberty, I believe, will be ignored incorrectly. The Morgan Stanley analyst likes Apple. It's why Home Depot's going down again on what I think is a good call. It's why KB Homes can be destroyed on something we all knew, which is that orders are weaker. It's what we talk about in my conference yesterday, Action Alerts, which is that there's a two-prong market. There's that the bulls are being gored on, which is Powell, which is tightening, I should say, and which is the president and tariffs. The president's tone deaf, doesn't really care, because he has a larger mission, which I totally get, and I believe it. I believe in the containment of China. I don't think it's bad. The Chinese people, we have an offering here. The fight is not with the Chinese people. Chinese people are fabulous, resourceful, terrific, historically been very friendly with us, no different, okay? But I do want to point out that when you have really good news and stocks go down, that is not bullish behavior, it's bearish behavior, and I want people to be careful. We're buying a little today because we sold a lot of stock, but be mindful that when stocks go down on perfectly good news, that's a bear market. That's what bear market is.
I want to ask you about Walmart because they released earnings this morning. We were talking about retail yesterday, and I'm just wondering, in general, what is your outlook on retail throughout the holiday season?
These are two different things. My outlook on retail is quite positive. My outlook on the stocks is quite negative. Now, that's beginning to be reflected in stocks. Kohl's is doing quite well. We sold some Kohl's at 80. Stock goes back to 71, 72. We'll buy some of that back. But I think the consumer has a liquefied balance sheet. If you go over what Home Depot said, it was very interesting. Home Depot said that you're just now getting the money from the tax returns. That's positive. You're just now getting even more liquid. But against that is the fact that if you want to sell your house to buy another house, you lose your low interest mortgage for a higher interest mortgage, which causes a lot of tightening. So these are the things that are really worrying people. Now, what should happen is our friend Ed Yardini, who spoke at our conference, what should happen, as Ed says, is that you're going to continue to get buying money into healthcare. That, again, is now you could say in a bear market nothing's spared. I disagree with that. In a bear market, there are things that are spared and others are annihilated. And the reason I say it that way is because we have sector funds that are so powerful that people can sell every single sector except for one, and they'll do that. The S&P money is not coming in right now as we thought. The hedge funds and the algorithms are very much in charge. I was looking at a stock five below. We like it very much. It's in the bullpen for Action Alerts. I said, wow, it's down 2. That might be an opportunity. It's on 24,000 shares. So, I mean, when you look at something like that, you say to yourself, you got to be very careful. Now, when you look at one point, the tick, which is an index I look at, was just out of control negative this morning, and that was when you had to do a little buying. That's when we bought some stocks for Action Alerts. But you could say, well, why do any buying? Well, if we don't a lot of selling higher, then we're not going to give up on value. But we recognize, like Warren Buffett, it's okay to own JP Morgan because it's going to bring out value. Everyone is so convinced that things are horrible. When he buys 35 million shares, I don't say he doesn't know what he's doing. I don't say doesn't he see the head and shoulders pattern. I say, well, that confirms a lot of my thinking about JP Morgan.
I have a question from Trish, who emailed me asking your opinion on Flex.
Well, Flex has accounting issues, and accounting issues equals sell, as per my first book, well, my second book after Confessions, Real Money, and I can't buck that. As soon as you see that. So somebody could say, well, Jim, GE had accounting issues. And I said, well, that's why I say sell. I mean, I don't want to be a person when the market's down 500 today who said buy Flex because it's cheap. I know better. Accounting irregularities equals sell.
Now, I got some great notes in my inbox from Jeff Marks, one of the analysts at Action Alerts Plus, and I can't wait to talk to you about them. But we're going to have to hold that for our Action Alerts Plus video.
But I just want everyone to understand, in bear markets, good news is ignored. And it doesn't mean that the bear market has to last a long time, because we all know that many stocks have been in bear market mode for a very long time. It's just that it's just dawning on people. Before, good news used to send stocks higher, and now it doesn't.
All right, guys. I'm Catherine Ross with TheStreet. Thank you for all of your insight, Jim. I'll see you guys tomorrow.